Traders, Gary Wagner here at just about 12:30 in Honolulu, 5:30 in New York. It is Monday, February 24th, 2020, and this is the Daily Report for Gold and Silver. And what a way to start the week, beginning yesterday, which was, of course, Sunday here in the afternoon. Gold opened Monday morning in Australia, gapped up above the close that we saw on Friday, and the range today was phenomenal, actually touching upon the 91s. In other words, it came close to 1700. I believe the high was 1691.70. It currently is trading at about 61.70, and of course, we took profits, pulled profits at 48 on Friday of last week, roughly about $10 from this price point. So after we look at the price board today, the real question is this uptrend sustainable? Will we see some kind of dip? In other words, where to go from here, and how are we making these decisions, and what is going to trigger the next signal? But first, to the price board. On any other day, we would say that gold finishing up about $13 on the day was an extremely strong move. But put in the context of what we have seen over the last, say, 36 hours, we've got to mute that with the high achieved in intraday trading when they actually took the market and challenged 1700 just shy by about $8. A high today, 1691.70, currently 1661.70, putting it up 1290 on the day, 0.75% move. Of course, we will talk about our next move when we pull up our technical studies, but we did get a mixed bag in the precious metals because we also had silver close higher on the day, but it gained about 0.4% at $18.60, but platinum and palladium closed lower. Platinum down $8.50 at $967.60, and palladium down about 2.64%, a $70 drop, which is not that much considering that palladium is still selling for $2,536.60 per ounce. Traders, let's take a look at our charts. I think that gold pricing in terms of the range today challenged some of the better or best roller coaster rides in the world. This was really a knee jerk in which we saw a tremendous high. It closed near the open of the market. It did close up about $12, but considering that we broke well above 1680, and if you recall, that was our initial target for a potential top in the market based upon a 78% extension of the last major rally that we saw in gold. Of course, what we're looking at is this move here from 1265 all the way up to 1565, this top. The market then comes down, touches 1450, let's call it there, and that's where we start our extension. Of course, the first level that we looked at was 0.618, and that is a level that we came close to, but shy because we only saw the market really go to 1613, and that was during the couple-day skirmish between the United States and Iran. Then we broke through that like a hot knife through butter, trading up, and then we've got a similar scenario, and that's what's so interesting. It's this extended high that we're looking at, and that, of course, is a shooting star in terms of a definition of a candlestick. A shooting star by itself is not that important, but if followed with a confirming candle, which would mean that tomorrow's activity would be a long red candle with a lower low, lower high, lower close, then that could signal a potential pullback in the market. Now, I did receive a question today from one of our viewers who asked, is this rally technically sustainable? And my answer is absolutely yes. Technically, we could see it go as high as, I think, about 1745. That's the one-to-one in terms of the relationship, or just shy of that. We've already challenged and crossed over 1680 today, but that was unsustainable. But so was 1613 when it hit that a couple of weeks back. And so what we call these kinds of moves is a term that was coined by Steve Nissan, of course, one of the first people, if not the first person, to bring Japanese candlesticks to the United States after Seiko Shimizu produced his book, The Japanese Chart of Charts, which is the first. He called it a scouting party. And simply put, a scouting party tests the fortitude of the bears or the bulls. In this case, it testing the fortitude of the bears, because as the market came up, the bulls pulled it up. It was unsustainable. The market came back down. I do think there is an area to re-enter on the long side, but I'm using a little bit of caution until we put on our next trade. I need a little bit more evidence until that time. We will remain neutral with no active trade. We're looking to re-enter the market. I want to see if the Dow continues to tumble today, down over 1,000 points on the close. And if the dollar, which was neutral during the day and now coming down, if that continues to come down, because those are the factors that will affect the next really major spike in gold. But whether or not it is technically sustainable, to me, is a very easy question to answer, and the answer is absolutely yes. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.